Eric Sprott is a billionaire mining financier, and today you have an opportunity to get into his highest conviction trade, the stock that he's invested the most amount of money into in his entire life for less than half of what he's paid for his own stock. By the way, don't take this video as investment advice and always do lots of your own research before investing any of your money. To start, let's let him give you the investment case for this.
I mean, these holes that are being announced are incredibly valuable. And I'm going to go to the value part, okay? This is the most important thing to understand what this opportunity might be. If you have 1 gram of gold, you got a big open pit, I mean, maybe you make 0.2 of a gram of profit, 0.2, okay? You got a 30 gram ore body, you maybe cost you 2 grams to mine it, you get 28 grams versus 0.2. That's 140 times more profitable, okay? That's 140 times more profitable. If it was 15 grams, it's 60 times more profitable. These are orders of magnitude that are crazy.
In that clip, Eric compares this deposit to one that has like a 1 gram per ton gold in an open pit. Now, 1 gram per ton of gold, that's pretty decent grade. That's nothing to scoff at. In fact, there's a lot of mines in production that are operating at a lower grade than that. Now, it's hard to wrap your mind around one mine being 140 times more profitable than another mine, but those are some crazy numbers. So this company called Kirkland Lake ended up taking over this company called Newmarket. And in this next clip, Eric talks about the drill holes they were seeing from this company, Newmarket. Well, this was from the Fosterville mine in Australia. And what the Fosterville mine did for Kirkland Lake, in a matter of like 3 years, that stock went up 15-fold. From about $1 billion Canadian market cap to 15 billion Canadian market cap.
There's your first hole, okay? 92 over 19 meters. Now I can tell you this because I was with Kirkland when we bought Newmarket, which had the Fosterville property in Australia, and I was a shareholder of Newmarket. And we would come up with holes like this, okay? But they're, 1 in a million. So these results they just continue to amaze with their results. I put down here a list of the hits. I mean, we don't need to go there, but just out of the park. Here in Newfoundland. Okay. I put this chart of Kirkland Lake to tell you something. So in probably before 2016, I was an investor in Crocodile Gold that became Newmarket. And here's a mining company that was announcing, they were mining 3 gram gold. Then all of a sudden the announcement, we got 5 gram gold. We got 8 gram gold. We got 15 gram gold. We got 25 gram gold. Holy jeez, what's going on here? And of course, this turned out to be Fosterville in Australia, the highest grade operating gold mine. And when we finally bought Newmarket, which I was a big shareholder in, but as a chairman of Kirkland, I would try to convince people that, this thing is going to be so big because the profitability with those kind of grades is going to be so off the wall that Kirkland could go crazy. And I don't think I ever convinced a director to buy any. 2 employees, I think, bought it. 2. Everyone missed the opportunity. I don't know why they missed the opportunity. And then sooner or later, along comes Kirkland, they report like, we made $200 million this quarter. Well, duh. When you got that kind of grade, of course you're going to make 200 million. Now, I put in the latest news release from April 25th, so that's 3 or 4 days ago. But it basically said we have 22 meters of something like 17 grams, and I think it was 18 meters of 12 grams. That's my recollection. And one of the things that's interesting about that, 40 meters, okay? I always like doing this, 40 meters. Would that be about 40 meters to the end of this room? About that, right? You imagine mining something that wide? How easy is that? 40 meters? Oh my God. And that's just, the width of the zone. We got the height, the depth, the strike. I'm just talking about the thickness of the zone. This is like, be a layup mining that.
In that clip, he talked about how mining something 40 meters wide is incredibly easy. So picture this. You have a football field. Everybody knows what a football field looks like. And 44 yards on that football field. That's 40 meters wide. That's how wide this is. That's potentially 140 times more profitable than a 1 gram per ton open pit mine. And it's not like this is in some third world country. I mean, this is in Newfoundland. This is in Canada. This is considered one of the best mining jurisdictions in the world. A lot of the awesome mines that are being found today are in the middle of nowhere because all the land close to stuff has already been explored, or well, most of it. But here, Newfoundland, for some reason, hasn't been explored much. So you can actually drive to where they're drilling. There's a road that goes literally right through their land package. It's very close to infrastructure, which reduces the cost of building the mine tremendously. Like, imagine this, where you're right next to a road, you're right next to power, compared to being 300 miles away from the nearest road. You have to go in by helicopter to drill. You have to take a four-wheeler out there and like have a little drill rig coming on the back of a four-wheeler. Things like that. It makes it extremely expensive and really expensive to have to build all the infrastructure to even get your equipment to the mine site. But here, it's right next to roads. It's very close to a town. The infrastructure's there. So when it comes time to build the mine, it's going to cost a whole lot less because it's close to infrastructure. But even more than that, a lot of the mineralization is right at surface. Like, so this is the surface of the ground. A lot of the mineralization is right here, 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 here. And then it goes down from there. They've only drilled a couple 100 meters down in most cases, but the mineralization starts at or very, very close to surface. So when it comes time to actually mine this stuff, you don't have to remove any waste rock to get to the ore. Whereas with most mines, like your mineralization might be down here, and you have to come in with big equipment and remove all of this stuff, getting giant shovels full, taking it away in trucks until you finally get to your ore. And that is really, really expensive. But the fact that it's at surface means it's going to be that much more profitable to mine. And Eric Sprott has invested $260 million into Newfound Gold. And after doing that, he owns a total of 20% of the company. Now that puts what he has paid for the company at $1.3 billion. But you know what? It's trading for about half of that today.